Hi, this is Mike Coleman, Mr. California Real Estate. Here talking to you today about debt forgiveness. Okay, what is debt forgiveness? Debt forgiveness is when you get involved in a real estate transaction and the bank agrees to accept less than's owed in satisfaction of the loan that you have on the property. When might that happen? Well, it certainly always happens in a foreclosure. Basically, the bank is taking the house in lieu of uh, payment on the loan, and there's going to be some kind of loss incurred. And in that case, the difference between what the bank realizes in selling the property and what you owed, the difference between those numbers is debt forgiveness. In a short sale, where you owe the bank $200,000, but the bank only gets $150,000 in the short sale, well, that $50,000 difference is debt forgiveness. Well, the bad news is that under normal circumstances, that debt forgiveness is taxable. It's just like income to you. Pretty scary, huh? Yeah. Well, the good news is that a year ago or so, Congress passed some legislation that will not tax that debt forgiveness under certain circumstances. And that's what I want to talk about today. What are those circumstances by which that debt forgiveness will not be taxed? So, if the debt that is being forgiven was debt that you incurred to purchase your home, or it's the debt you incurred to purchase your home that you just refinanced at some point, those two loans and the debt forgiveness would not be taxed. In addition, if you took money out of your house to substantially improve your home, for example, you took a home equity loan or a second mortgage on your home to add a room or build a garage or to finish your basement, then in those cases, the debt forgiveness for that type of loan would also not be taxable. However, if you borrowed money against your house to go buy a car or to use for any other purpose other than improving your home, then that debt forgiveness is taxable and you need to report it on your tax return. Now, by the way, I should add here that I'm kind of giving some tax information here, and I want to make sure you know my credentials behind that. In addition to being a licensed real estate broker in the state of California, I recently passed the SEE exam. That's the exam that they give enrolled agents. Those are folks who are authorized to practice in front of the IRS. So I am not an enrolled agent yet, but will be very soon. So I do have expertise in this area as well. So there are some limitations on this debt forgiveness. If you are married filing jointly, $2 million. I think that's got most of us covered. If you're married filing separately, then it's limited to $1 million. Still, that should cover most of us, because again, we're just talking about the debt forgiveness part of this. So there you have it. This is something very important to understand if you did do a short sale or your work foreclosed on, because you'll be receiving at the end of the year a Form 1099-C. And that 1099-C will have a dollar amount on it that is your debt forgiveness, that you're going to get that from your bank. You need to make sure that your tax professional, whoever prepares your taxes for you, gets a copy of that so that they can fill out the Form 982 and make sure that if you do qualify for the debt forgiveness being non-taxable, that it'll get in your tax return. Hey, I'm Mr. California Real Estate, Mike Coleman. Visit us on the web, www.centralvalleyareahomes.com.